Hello, this is Beast McFeast with another hot ticker review. Today we're going to be discussing Chewy, ticker CHWY. Honestly, it has not been hot lately. It has been declining since their last earnings at early September. If you find this video useful or for some reason entertaining, go ahead and subscribe and recommend another ticker in the comments. Today we will go over what Chewy does, some recent events in Chewy's history, their financial performance, how I'm going to play this, and finally, long-term price estimates. Some of you might have seen in my previous post that my boy Sammy, my Shih Tzu, picked out this ticker, so I've got to play it now. Before I get started, I want to be clear, I'm not your financial advisor, and I do not endorse any specific investments or investment strategies. These are for demonstration purposes only. Investing involves risk, and you should know your risk tolerance. And finally, investing is not a team sport. Diamond hands hold bags and pigs get slaughtered. Chewy is an e-commerce business specializing in pets. They're trying to essentially become the Amazon for pets. It's kind of weird because Amazon also sells pet stuff. They offer food, toys, clothes, all sorts of stuff. They recently added a vet market so vets can have prescriptions sent directly to their patients. They cater to dogs, cats, reptiles, birds, farm animals, really most pets that you would think to have and probably some you wouldn't, they've got supplies for. One big selling point of Chewy is their auto pay and ship feature, where they will automatically ship recurring orders to you, and you're going to save a few dollars on already competitive prices. I know several people who use this feature and just kind of set it and forget about it. They also have their own brand of toys, and maybe we'll get into the food game shortly. So the second quarter results dropped in September of this year, so earlier this month, and the report was mixed. I mean, they were within the expected earnings, but at the bottom of it, so that they ended up with a minus 4-cent EPS when they were expected to maybe break even. So it wasn't the best quarter. Net sales were $2.16 billion, so we're talking about a pretty large company here. I think their current market value is about $30 billion. And they ended up with a net loss of $16.7 million, which kind of bugs me because they paid out almost $29 million in stock and options to executives this quarter, which means they could have probably avoided that net loss. They didn't mention this in their earnings call, which was probably convenient for them. It just bothers me that they gave away potential gain. And depending on how you look at it, this is the cause for their loss. They could have had a potential net gain, but they gave away stock as compensation. So any investors who are listening, maybe vote for lower executive compensation in the future to the tune of, I don't know, $29 million? Their growth is okay, with year-over-year sales up 27%. They state that their retention of clients is pretty high, probably partially due to the auto order feature. And they noted that the customers that they retained are spending more. Recently, they started carrying fresh foods, which might attract some new customers or give some different options to some existing customers. And it's kind of an expensive way to go for dog food. If anyone here has pets, you know that fresh food costs more. And the launch of their vet market should help them in the future, though we aren't going to see this, obviously, on quarter two because this just happened. We might not see any big impact from the fresh food or the vet market until early 2022. So after these earnings, they dropped a little over 10%. Then they got caught in a market downturn. So they're kind of hurting right now. The current price is a little over $69. Some more positive things is their supply chains problems, which are plaguing everyone essentially, are improving. And they are building 3 new automated fulfillment centers to help with labor shortages. And they expect these to be done in the fall of 2022. So on paper, Chewy is not doing the best. Their PE ratio varies depending on where you look, but nowhere is displaying a pretty number. I think the best I saw was a 900 PE ratio, and I've seen nearly 4,000. So we're going to call it a good 3,000. People are pricing in a lot of growth on this, and it would be nice if they could achieve it, but that is unclear yet. The forward PE is projected at 223, which is still insanely high in my opinion, but not unheard of for e-commerce and tech stocks. We'll see if they manage to ruin this with executive compensation as well. The price to book is 350. So if investors were to lose confidence on this, the floor is really, really low. So customer growth has been great at roughly 29% per year. But on their conference call, they anticipate that it's going to slow. I think they picked up a lot of new customers due to COVID, and they've kind of saturated the market. They're starting to spend more money on advertising. It's unclear how well that's going to work. Now, EPS growth. So EPS is a problem, but the growth has been 100% over the past year. That might be hard to sustain. We'll see. And one good thing is their ability to pay back debts is not in question, as they have more cash than debt. It's something I personally like to see. I don't like companies throwing money away on debt. Again, I'm playing this because my dog Sammy chose this ticker out of 3 choices. I think that in the short term, investors overreacted to the not so great earnings and market instability, and I suspect that it will bounce shortly. Given that I don't know how high it's going to reach after this bounce, I think I'd like to go with some all debit spreads, probably with the long leg around the 50 delta or just out of the money. Looking more long term, in the next 12 months, most of the analysts I'm looking at are predicting this to be in the $80 to $121 range, with most on the high end of that. Obviously, its current price, which is $69.83, is well below that, so there's potential for quite a bit of upside for investors if the analysts are right. Now, I'm a little less confident for the rest of 2021 and the first half of 2022. I think that they should probably be priced around the $75 range through the end of 2022, although we'll see how confident people are in this. People do seem to be willing to pay a premium for their growth potential. That being said, their projected PE is still over 200, which is really high, and a little more than I'd like to play in the long run. So I think this is tradable, swing tradable maybe in a couple of weeks or months time frame, but I don't look at long-term potential at this price. One reason for this is that the earnings call indicated that they were concerned that they would not be able to maintain the growth that they have seen so far. That being said, you all are welcome to invest or trade it how you'd like. Go ahead and let me know in the comments how you're playing it. Thank you for watching. Please leave any questions, ticker recommendations, or comments in the comment section. Good luck. Get rich. Bye.